Hello from the Dukascopy TV studio in Geneva. We are talking about G20 currencies and perspectives for the year with Neil Standen from GFI in New York. Mr. Standen, welcome to the studio. So you are an interdealer broker specializing in emerging market government bonds, interest rates and foreign exchange. So which specific countries are you particularly focusing at right now?
We look at the whole range of emerging markets. We base the majority of our voice brokers here in Switzerland, but we actually operate out of the London, Dubai and Johannesburg offices as well. So we would cover all the African currencies, obviously South African rand and the sub-Saharan currencies such as Nigeria and Ghana, up through mainland Europe, so Poland, Hungary, Czech Republic, Turkey, all of those markets. So we have quite a wide geographical reach office-wise. Which is sort of predetermined by where our customers are. We talk to wholesale banks and those wholesale banks are based really where we are. We act as a interdealer broker, as you said, to facilitate those trades between those wholesale banks. So where our clients are, we are.
So what are your specific outlooks for G20 currencies? Do you have any specialities that you're focusing on right now?
Well, we are an emerging market specialist, as you said, and I've spoken on various shows over the years with yourself as regards emerging markets. I mean, it's still very much a dollar-led story. I think we've read in the press this week with the FOMC coming up this evening that these markets are all very interrelated now. They're not standalone, and there's been a lot of conjecture over the last few months as regards when the US will raise interest rates, and that's having a profound effect on the emerging markets. If you remember previously, we talked about the taper tantrum in 2013 when the then federal chairman Ben Bernanke said they were going to curtail their quantitative easing, and it caused mass panic in the emerging markets, huge outflows. I think this year we haven't seen that so much. I mean, there's been a lot of currency devaluation within the EM space, but it's been a bit more orderly insofar as we haven't seen the run in the bond markets, the equity markets. It's been a little bit more controlled. But the US is standalone. You've got 24 central banks all effectively devaluing their currencies, and the US standalone talking about raising. So we'll know more in the next 24 hours.
So you just mentioned quantitative easing. From the US side, now the European Central Bank has also introduced the quantitative easing program since the beginning of March. What effect would you think would this have on emerging markets?
Well, quite a serious one, because you've got quite clear divergence in policy. So, you know, the euro and the Japanese yen are drastically reducing their rates, they're drastically devaluing their currency, and the divergence with the US is quite clear. I think one famous, globally famous brand hedge fund manager has just described it as the cleanest shirt in the dirty laundry. And yeah, I mean, we're going to learn more in the next 24 hours, but I don't think we're going to see any change in that. I mean, the markets have been a little bamboozled in the last few days because there's been some weak US data out, weak retail sales figures for February, and there's been some dollar weakness this week, but overall the macro is long dollars, bull run continuing. But if Janet Yellen turns around and becomes slightly dovish and doesn't remove the word patience from her narrative, there could be some serious volatility in the next few weeks.
So we will see. What current developments and trends do you see regarding the G20 currencies this year?
I think more of the same. Much as nature abhors a vacuum, I think emerging markets don't like surprises. I think it's probably going to be based on how the language is used by Janet Yellen. I think if it's going to be gradual, patient, kind, it will be orderly. But I think if, as I said just now, if there's a dovish tone kicks in, we could see some quite large volatility this year.
And talking about the removal of the Swiss peg, what kind of influence does this have on emerging markets?
Well, again, previous shows on Dukascopy, I think I said expect the unexpected, and that was obviously a major market event which confused a lot of our clients. But it was a very volatile period as well, and as a IDB, we thrive on volatility. So, you know, we've seen some major moves in the last year with oil price plummeting, euro peg disappearing, speculation on what the US will do. And I think that will continue throughout this year. There's not going to be any one thing that we can predict, but I think that, you know, things can happen and we're not ready for them, and it'll introduce quite a lot of volatility into the market.
Neil Standen from GFI in Lyon, thank you very much for being here and sharing your expertise with us today. And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.